Hey traders, this is Christian Farmer at Tribeca Trade Group, and it is Monday, August 12th, and this is your end of day recap. So, more downside after Friday's price action. We got S&P finishing down 1.2%, or S&P futures down 1.35%. We had the Qs finish down also over 1%, down 1.15%, and IWM small caps were down a little bit more. So, yeah, I mean, I guess you could say the usual risk off day. It certainly felt like that. A lot of sectors, not very many, a lot of sectors down, not a lot of areas to really kind of hide out in. So S&P down 1.4%. Let me talk about a couple other things first, and then we'll talk about the technicals. So, the wall of worry, this is what Joe Weisenthal tweeted out earlier. Yeah, I mean, I think we got a lot of things going on, and I think that's why the market is kind of spooked a little bit. It's also August, which is, traditionally a more lower volume time of the year. People are on more vacation. So it could be just people are kind of, some of the big money managers, funds are kind of hiding out a little bit. So I think this is going to kind of continue. The price action, so clearly you could read off all these things that are kind of causing the people to be a little bit worried right now. But I would think number one is the Hong Kong protest, which you see on TV. You could turn on any one of the financial networks and you could see that every 10 minutes go by. And then also what's going on with Argentina too, kind of threw people. And uh, whenever you see credit default spreads widen out, then people are starting to think about, well, who has exposure to that and so forth. So it kind of creates, these things kind of create a short-term ripple effect. And right now we're just, these are new things, and the market's going to react to them. So then the second thing that I would bring your attention to, what did I do? Here we go. This sentiment trader was another really good follow on here. Stocks have moved more than 1% for the ninth straight day. We're coming off a 52 week. When coming off a 52-week high, it's only happened three other times since 1982. It happened in November 2009, May 2010, December 2014, and the S&P did work higher over that time. So you could definitely see that we've been talking about how the market's been moving a bit faster than it normally has. Yeah, that many up plus or minus 1% days, sure. The market is really doing something a little bit different. Volatility's higher, right? So we got the VIX at a 21 right now. We kind of hung in there below below 20 for a couple days. So here's a couple things to watch with the technicals. But yeah, I think those are kind of the main things going on right now in the market. We had our bounce, right, off the 200-day moving average and a couple areas that we talked about last week, which I'm not going to rehash all of those. But one of the things that I said in the weekend member video, as well as a bunch of other things that I don't share with the public because it's for members. But I said if we can't get above 29.34, it's going to be an issue for us. Well, it's we don't know if we're going to retest the lows, but I do think we have some support, which is the good thing. We've got 28.56 in the S&P futures, so that is still a ways away. And that's kind of the issue with this value area that we have this week. It's a wide value area, but we do have support there. Also in the Qs, also an issue here is we broke into value for the week. So normally, like sometimes at the end of the day, I try to look for some type of a bounce trade when we're a little bit oversold in the short term, which I don't think we're oversold yet. So I think that remains to be seen. But I don't like how we're just kind of we don't have any support really close to where we are in both the Qs and in S&P. So therefore, I did not really look to take any new trades. My best hope is that we actually open in the red tomorrow, and it may be a little bit of a buying opportunity. Speaking of that today, just how you could tell days like this when the sellers are still in control. Even when we bounced, and this is what I said. So you may think it's all hindsight, but I actually traded the Qs today, and I unwound them at that bottom of value today. And I had said in the trading room, I said, just be careful. We get these bounces, and they're happening, and it's tough to pinpoint exactly. It's also happening around when Europe closes around 11:30, but it's also around lunchtime, and you have to remember lunchtime is the lowest volume time of the day. So it troubles me that that's where we're getting the biggest bounces, because there's no volume there, and that's usually when if you are familiar with what's known as a VWAP algorithm, volume weighted average price, where basically somebody, like a fund, is basically selling over the day, right? And when they're doing that, when they're selling over the day or buying over the day, they will trade a lot in the first couple hours and in the last couple hours, but they will trade very little volume around lunchtime. So midday. So that's kind of feels like why we're getting these bounces. I think the same thing happened. Again, this is not what's been happening every day, but I think Friday we got the same thing going on too, where we bounced, right around midday from the lows, but then we don't have any. There's no follow through. So the only way to be kind of hanging out in this type of market, if you're a expert scalper, then this could be fun for you. But other than that, you can kind of just go for a walk for the day, because I do not think that these are the greatest days to try to establish. Swing trades in right now. I still think waiting to the end of the day is the best time to do that. But considering that we're falling into value, do I want to short here? I don't know. And based on how the sector deterioration looks during the day, it's not. I think it's worthwhile to be hedged right now as we're breaking support, and that whole bounce has been, not the whole bounce, but we're giving a lot of that bounce back. So that's what's going on here, and I think again you just kind of have to. Be situated where on these days you just try not to overtrade, and try not to really, easier said than done, but try not to overtrade and lose money on these days, not give back the days where you've made money on some better trading days. But yeah, it just kind of felt like, and then once we broke this level, so again, I think it remains a little bit uncertain, or a little bit more. It's always uncertain, right? But I don't like when we start to break into value areas, which is what we have here. So now we could reclaim this in the overnight market, and I would say right around 185 would be the level to watch. But you could see as well. When we bounced, first of all, we didn't get to the bottom of value in the. I'm just looking at the Qs today. And then this 200 period moving average was the barrier. We could not really break, and that's also really good helpful in the short term, just to see where, if you're in like a negative trend in the short term, or downtrend in the short term, or an uptrend. And usually when the price is below, this 200 period moving average will act as resistance, and you can see we're still below this. So there's no rush, I would say, for me anyway, to kind of take positions. I want to see this. I want to see price get back above this and kind of establish itself. So again, I do think looking at this wall of worry, right? The positive is that there's a lot of things. Now, usually, so it's when you have, what do they have? 3, 6, 10 different things on the wall. That's usually kind of, to be contrarian, it's pretty close to bad news saturation when you got all these things going on. But some of them are going to linger for a little while, right? So I don't know if some of these things will go away. So the other thing that we kind of picked up early in the room was that this TLT is kind of remaining is very strong. I mean, bonds don't normally have up 2% days, but that's what you're getting right now. And of course, this is getting way overbought again, the bonds. But people are really, this is where they're flocking right now. So I do think there was a decent in terms of option activity today. There was put buyers in TLT various times. You can ignore this one because it's a buy right, which means that it's against stock. But you could see puts, and they were buying these early on in the day, like 9:36 this morning. So they're underwater with those. So just keep in mind. And sometimes you can use option activity by not jumping in. If you like a trade, right? If you're looking to fade the TLT or fade bonds, You could kind of wait sometimes whenever you see option activity, because a lot of times they pick the wrong, they bought those for weeklies for $1.71, and I don't know where are these things trading. So it just goes to show you. And I know I try to do this a lot to tell people, because I think some newer traders who are looking at option activity on Twitter, they have this understanding. They have this understanding that, or they have this belief that, every time they see an option trade, that they know something. Um, and from experience that a lot of times they don't know anything. But 23,000 contracts traded on this 142 line, and you know where it's trading. So if they knew something, right? Because again, everybody always thinks, oh, they know something. Well, they know. They're trading at 111. That's the price, or 112. Is mid market. So if they knew something, now again, they might be right on this trade, and so again, you could get this trade much cheaper. But if you do the math, divided by what did they trade these for? 171, did I say? Whoops, sorry, I did this wrong. 171 minus 112 divided by 1.7. So yeah, they're trading down like almost 40%, right? So just bear that in mind when you see this stuff, because this happens a lot. I can tell you a few other trades that hit the tape today, and we'll go over some more price action as we're about 10 minutes into the video. But yeah, somebody was thinking that this is overdone, because yeah, you got 23,000 of this. I'll check the open interest on that tomorrow. That'll be one of the first trades that I check to see. And that's for this week. So keep in mind, you do have a lot of economics that should affect things this week. All right, so if we look at we've got, so this actually is one of the most interesting data points that I follow, is the small business optimism that comes out at 6 o'clock in the morning. You will probably hear, like, if you're watching like CNBC all day long or Bloomberg all day long, you may hear like one sentence about it. So then we also have CPI. We've got some things that could move bonds around, and then of course the unknown, right? Which, who knows? But yeah, 23,000 of those TLTs, and they're marking down about 35% from where they originally started buying them right after the open this morning, as bonds rallied. Gold was all over the place today too. That finished up 1%, but for the most part, if you look at the 5 minute in gold, uh, this really got going once. Now I don't know if there was some news, but this was at 220 today. This is when the S&P and the Qs took that leg lower in the afternoon, and broke the support that I mentioned on Twitter. So right here, this was right at right about 2 o'clock as well, when this leg down happened. So this market is going to continue to kind of keep you off kilter a little bit. So just like we're falling into support here, it'll be very easy to get back above 185. So that's what I'm watching for tomorrow. You could see, again, not a lot of places to hide. This is percentage change after the open. So even though we started down about 0.75% in the major averages, they went down another 0.75%. And you could see also that there was very little areas to hang out, even in the gold miners. Even though gold was up 1%, the gold miners finished down 1.2. And if you were buying them, you got creams, because they were sold off 2% from the opening price. So I think they must have opened up positively, because they gave back a lot of stuff. Steel names. This is another area that really is getting concerning. All right, along with the steel ETF is broken down. And if you break this down to like U.S. Steel, so again, I'm not trying to be negative. I'm just noticing like what's going on here in the market, and it's like just doesn't add this to the wall of worry, is that more and more companies are starting to break down like this trade sensitive areas. So that's got me a little bit concerned as well. It's just not as healthy as a investment landscape. Software names started to get beat up today too. They fell 1.7%. So the conventional wisdom thinking is that you can maybe go into some software names because they have less trade sensitivity to them. But sometimes you can't hide in these either, because sometimes when there's profit taking, they attack this group too. So bottom line, I think, before we talk about anything else, well, I'll give you my bottom line in a second. There was some HOLX calls that went up today. I thought that was interesting, going out to September. A couple other trades like that we went over in the room. Some two-way flow in JD.com, which those names are going to be reporting. But bottom line is, just be patient with this market and let it kind of do its thing. We've seen this before. If we go back to the S&P chart, right, we've certainly seen bounces, back last year. I was on TD Ameritrade's network today, and it was just talking about how it's a little bit of deja vu from last year, right? We had a big move up in January, moved down a little bit in the spring, summertime, rallied all the way back. Remember, in October, we fell. We had a little bit of a bounce, and then we fell. We broke the low again. So we don't know how this is going to materialize. The one thing that's different about that scenario is that we have the Fed is kind of behind the market's back. So keep in mind they can only do so much. But I think that's the one thing that kind of tells me that this might be a little bit different than what we saw, back in December. But it could be a lot of really choppy markets. And I think the best way to kind of deal with choppy markets is, to be profitable in them, is to not chase stocks. So really, if just like we saw on, what was it, Thursday of last week, you had that full participation day and everything rallied. If you chased into that day, you got nailed. So that is the technique to kind of really help you in these choppy markets, is to not chase, and you really have to kind of buy names that you like, that are dipping. Right, and I did that a little bit today with Google. We sent out a call spread idea, with that one. And that one, you have to, for me, like, you have to be able to scale in. So I never start those positions like going all in as soon as I have the trade idea, because especially in this market, which I think it could, possibility that it could be, further weakness to the downside, and then maybe we get 1 or 2 days this week where we can bounce a bit. That's just an idea off the top of my head. All right, so we'll leave it there. It is Monday. Have a great rest of your day and night, and I'll see you guys in the trading room tomorrow morning.